Here's the 4-hour price chart for NIO Incorporated, stock ticker NIO. So here we can see that last week closed trading a bit toward the lows here. So what we want to do currently is sort of make an outlook for the upcoming week to try to see where this stock is most likely to trade next. So currently we have to kind of drill in here a bit and look at these actual price lows here. So as we can see, the near-term lows here did post at roughly 425. This was after a bit of a price decline after failing from resistance levels at 492. This is, this price decline here was fairly significant for a couple of different reasons here. One would just be the simple fact that, we were not able to overcome the $5 mark. For many people, this is going to be an important psychological level. If we did see a break above $5, that would be more of a news headline, and it would suggest that the bottom is really in, and that we're ready to start substantially moving higher. But for the most part, I tend not to focus too much on those types of psychological levels unless they have some sort of technical chart analysis significance to them. And I'm not really seeing that here for the most part. I mean, we do have this prior high here. This would have come in during the July 3 trading session, where the ultimate high here was 504, $5.04. So there is a bit of a resistance zone in that area. But the actual price failure, the failure to test the $5 mark, that on its own doesn't concern me as much as it might concern some people. Because I'm just not seeing much technical resistance in that area. But what I would consider to be more significant here would just be the fact that we were not able to see any real significant follow through after we did see another break of this trend line to the top side. So this dominant price pattern here is still this descending triangle pattern that we have to keep watching here, because what we're starting to see is a more firm base that's starting to develop. If we really look at these support zones here that we're starting to see, we have this price low from the 28th of June 28, which came in at 415, and then these more recent lows, which come in at 425. So, of course, these are not exact. These are not, exactly the same level. But for the most part, they're relatively close. I mean, we're within about 10 cents of each other. And this does, sort of add some weight to this area because what it really means is that we're forming more of a base here to this triangle. So if we can continue to do that, it does become more likely that we actually break through this pattern to the top side, because if we were to test this area once again and then bounce, this would create a more clearly defined double bottom structure, and this would make it much more difficult to violate to the downside. So currently, the fact that we didn't break through this trend line, to me, is, in my view, is more concerning than the fact that we did not break through the $5 mark. The real question here going forward next week is whether or not we're going to be able to break this level next week. Overall, I'm still focusing on that direction, in the bullish direction, because even though we do have some negative indicator readings here that are a bit longer term in nature, we can go back here looking at the relative strength index on the bottom of the chart, and we can see that these prior price highs, which occurred at $6.04, the initial failure here, short-term failure here, did start to create a bearish trend in the underlying momentum in the relative strength index. So this goes back quite a ways here. This goes all the way back to May 6th. But if we look a bit shorter term on this chart, as we're starting to form this base in the descending triangle here, we can see that the relative strength index reading here does start to move more in the positive direction. So, there is sort of an underlying firming base that's occurring here, and it is being supported by upward momentum. I mean, you can honestly make the argument here that we are seeing a bit of a bullish divergence within this pattern, even though there is this sort of longer term downtrend in the momentum reading. I mean, because if we look at the shorter term movement in the RSI, we are seeing that share prices are roughly trading sideways, and we're even testing some of the same lows. But the indicator reading itself continues to trend higher. If we look at it more closely here, we can see that it's trending higher to the point where we're not even in oversold territory anymore at the lower end. In addition to this, we're on the verge of an upside break here in the relative strength index relative to its own moving average. So if we did see a break above there, at the very least, that should lead to an upside break in these near-term resistance levels that come in at roughly 445. So if all of that were to occur, and as long as we can sort of maintain this base in this descending triangle pattern, even if we don't forcefully break through the top side, if we're at least able to hold on to this base, this does give a firmer structure to the support zone, and then it will, these moving averages will start to move down into that base. So eventually, it becomes a situation where it's sort of like an immovable force and an unstoppable object starting to meet each other at some point. If this downtrend line continues, but this base on the triangle continues to firm, at some point one of these factors is going to have to give way here. And if what we're really looking at here is a bullish divergence that's starting to develop in the relative strength index reading, to me, that does look like the outcome here does favor the top side. I mean, I really wouldn't expect to see this, forcefully break through support levels or anything like that. Largely because we've also got this additional support zone that isn't far back at 360. So, a lot of this does depend on how the broader market is going to be trading. Tech stocks have been under a lot of pressure. The NASDAQ has been under a lot of pressure. Even the S&P 500 is seeing a lot of losses. So if that continues, it's harder for the stock to gain upward momentum. But overall, the technical picture here does not look unfavorable in my view. I mean, it really just seems to be a matter of time, in my view, before this descending triangle starts to break to the upside. And then if that does occur, it does completely invalidate the bearishness of that pattern. So, overall, the technical evidence currently that I'm seeing does still support a favorable outlook for the coming week and for a favorable resolution to this specific price pattern. So here's the current market analysis for NIO Incorporated, stock ticker NIO. Join now to outperform the market. Lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership and start trading stocks with the pros.